Joining us right now to dig into this all in depth is Target's CEO Brian Cornell. And Brian, it's great to see you this morning.
Good to see you. Thanks for joining us.
So very strong numbers for the fourth quarter. What happened?
Well, I think the team delivered a really solid holiday season. And you talked about the results, but it was great to see the comp sales grow. It was driven by traffic, which was really important. And it was led by categories like apparel and beauty, really strong performance in toys and books. And our digital performance just gets stronger and stronger. Up over 7%, led by same-day services that grew over 25%. Our Target Plus marketplace continues to perform really well. So the team did a really nice job of connecting with the consumer during the holiday season, and we're just building on the momentum we've seen in recent months. That traffic growth, it's the ninth straight month that we've seen traffic grow, and to see traffic up 2% during an important holiday season was a real bright spot.
So traffic is here. You guys are pretty optimistic about the full year, but you do have some concerns for the first quarter. And I think that might be what the street's reacting to right now. The stock is up by about 0.8%. So you always see some fluctuation right when the numbers come out. Excellent fourth quarter, really good guidance for the full year, but questions about what's happening right now in the first quarter. First of all, what happened in February in terms of sales? What did you see?
Becky, I'll go back to something you and I have been talking about actually for several years now. And it's just the state of the consumer. And I think we've seen a cautious consumer for quite some time now. You know, they're shopping carefully. They're making sure they're stretching their budgets as carefully as they can. We know that that's a consumer who's been looking for value, but is also celebrating the key holiday moments like they did during November and December. We saw that in February. We actually had record performance around Valentine's Day. A consumer wants to make sure they're there, they're in Target stores, they're shopping online. They celebrated that moment. But we also saw extreme cold across the country. And actually, as we've seen temperatures warm up, for categories like apparel, we've seen a pretty good spike. But it is a consumer right now that I think is under pressure. That's not new news. You reported consumer confidence has taken a downturn in the recent weeks. And I think there is some concern about tariffs. And I think there's a number of Americans right now that understand what a tariff is and what it might mean for them. So I think that cautious shopping behavior that we've seen for quite some time now continued in February.
In terms of February, how much of it, the cautiousness you saw from consumers was from the weather? How much of it was from the fires and floods that we saw in different places across the country? How much of this is the consumer kind of having spent everything in December and maybe reining in some spending a little bit afterwards?
I think it's all the above. I think you've really summarized it. But I also recognize it's 1 month. We're excited about spring and the Easter season. We expect Easter to perform just like it did in Valentine's Day. So there's a lot of obviously time in front of us. But you described all the factors we're looking at in February, from fires and floods and extreme cold to just consumers that are looking at their credit card bills and saying, I might pull back just a little bit. But we've got a really optimistic outlook for the full year. And in a few hours, we'll talk about our confidence in the next 5 years. And sitting here today, I'm very excited about where Target sits as we think about the next 5 years and how we build on the momentum that we built in our business.
I've just been watching the stock as you've been talking. It's over your shoulder. And it's gone from up over 5% to down a couple percent to now just around the midline. It's up by 0.2%. And again, this is a lot of bouncing around. But I think the investor is doing the same thing with every stock on a daily basis at this point, trying to figure out what is the impact right now. And the uncertainty that comes around tariffs have raised a lot of questions. How do you see the tariff in terms of, A, how your business handles it, and B, what you think it is, the impact to the consumer?
Yeah, we always start with the consumer, Becky, as we think about the implications of tariffs. And we've been working on this for quite some time. We had a very experienced team. This is not the first time we faced tariffs, but it's really understanding where we go from here and the impact it'll have on consumers. So we'll watch it very carefully. We'll see how things unfold. I think for anyone in our space today, we're looking for certainty. And hopefully over the next few weeks, we have a better understanding of how things are going to move forward, and we've got to react accordingly.
So if the certainty is, OK, all goods coming from either China or Mexico are going to face 25% tariffs, and if you're coming from China, it's going to be 25% from these two countries, 20% from China. What does that mean in terms of what you're bringing into this country, what you sell?
Well, I'll start with half of the goods we sell come from the United States.
OK.
And over the last few years, we've gone from over 60% of our imports coming from China to 30, and we're on a path to get it down to 25. So we've diversified our supply chain to give us more optionality, and I think that'll serve us well as we go forward. But we always want to make sure we're delivering great value to the consumer. And over the last couple of years, you and I have talked about the importance of making sure we're delivering value. It's a consumer that's on a budget. We want to make sure we delight them with great new items, but also the value they're looking for, that affordability every time they shop. So we'll continue to make sure we lean in and do everything we can to control prices, provide that value, and continue to delight them with newness along the way.
So what did your team do to prepare for this potential eventuality? I mean, there were a lot of people who still didn't think this was going to happen. Midnight has come, and they are in place as far as we know at the moment.
We've done a lot of scenario planning, and we've tried to understand what are the different options that we might have to face. We'll go back and understand the implication of Canada and Mexico. We've been looking at that. We know for certain categories, like fruits and vegetables, where during this winter season, we depend on Mexico for a significant amount of supply. Those are categories where we'll try to protect pricing, but the consumer will likely see price increases over the next couple of days.
Over the next couple of days? So those go in
really
instantaneously?
Short supply chains. You think about all the fresh produce. We depend on Mexico during the winter. We're going to try to make sure we can do everything we can to protect pricing. But if there's a 25% tariff, those prices will go up.
For things like what? Strawberries, avocados, bananas? What are we talking about?
You've got that list right.
Is that so?
Those are some of the key items.
And those prices could change within days in the stores?
Could change certainly over the next week.